Hey everyone, welcome back to my channel. So today I welcome Pete Komolafe, Conversation of Money. If you're not following and subscribed to Pete on his YouTube channel, do go head over and take a look at some of his content. It's awesome, all personal finance as well. And I've had Pete previously join me in London as well. So if you haven't seen that, go check that out on my playlist under the interview series. So Pete, welcome to my channel. Thanks for joining me.
No, thanks for having me back, mate. Really do appreciate it. Thank you.
Awesome. So today, for anyone watching, and as you might have seen in the title, we're going to cover off what's been pretty hot in the year 2021, and that is AMC and Bitcoin. And what I want to discuss with you today, Pete, is just sort of organically go over what's happened, the ups, the downs, and some of the horror stories that I've heard, and you may have heard yourself, and basically starting with AMC, and then what we'll do is we'll cross over into Bitcoin. And basically what's happening and what do we need to be aware of going into 2022, because that's where I'm looking now, what's going to be happening, staying one step ahead basically. So to kick it off, Pete, AMC as a whole at the moment is plateaued. Where is it going? Is it a dead horse basically at the moment? What's happening?
It's interesting. Someone asked me this the other day on a talk that I did, and I basically just said, look, I think when it comes to AMC specifically and GME, because those were the two big meme stocks through 2021 that got pumped like crazy, right? I think both of them are kind of done, because the question was, is the squeeze still possible? And after, well, when was the last hype? I mean, we spoke, I think it was maybe in June or so. It feels like it's been like almost 6 months since we've had that euphoria around, oh, it's going to go to $120, $150. And I couldn't see it at the time. I think it was around about $60 or so. And I was like, I can't see it ever getting there. And people are still asking whether the squeeze is still on. I think if you're investing and you've got all of your eggs in one basket, hoping for the opportunity of a lifetime, you're investing wrong. You're doing it completely wrong. Your approach is completely wrong. Unfortunately, with stocks like AMC, those are moments in time. And unfortunately, you can't foresee these moments before they happen. So you're either there to be lucky or you're there to be unlucky. And a lot of people fall into both counts, where they were very, very lucky. Some people were very, very, very unlucky because they just went with the hype, and, they lose money or they get stuck in a cycle where, you know what, you're sitting on a loss at the moment, still hoping for a squeeze. I personally think, the stock price at the minute, I think is around about, I'm just looking at this on a chart right now, it's like $39.24. I think that's probably around about where it probably will end up. Before all of this mania happened, it was trading in the regions of 27, roughly around about there. So I wouldn't be surprised if it comes back down to that kind of level, but I think where it is right now is probably where you're going to see it if it doesn't retrench back down to the 20s. I don't think there is going to be another squeeze on anytime soon. But then again, it is a crazy investing world. I might be wrong. There was a stock yesterday that went absolutely nuts, 354% off the back of a tweet or so from Donald Trump, 354% up. And people in my group were like, did you see this today? And I was like, I haven't paid attention to it. But if anything, if I was trading and I was short in the markets, I'll be looking at that stock right now thinking, I'm going to short and take the short position, because if something goes up 354% in one day, it has to come down at some point.
Yeah, it does. And I think the way that I'm looking at this, Pete, is that 2021 brought a lot of retail investors to the market, which is a good thing. Mm-hmm. People are more aware, I think, from an exposure point of view. People are perhaps trying to be more smart with their money and investing, which is great. But at the same time, you hit the nail on the head. People are going all in on AMC. And there are some horror stories where people are refinancing their houses. They've sold their car. And what scares me, especially when it comes to AMC, I think it was back in June, wasn't it? Where we've already had that. We've already had the peak. Mm-hmm. And look at the chart now. It's showing nothing but plateauing. And then you've only got to match that up to GME, Volkswagen back in the day. It's a very similar pattern. And I think a lot of AMC apes are going into denial. And I've seen the trend of it's going to happen in June, the $400 mark. It's not, okay, it didn't happen in June. It's going to be July. Watch July. We're now coming into November. How many months ahead do we keep going over this? And my concern is that people still lose money. And when you go on, platforms like eToro and you look at some of the latest feeds that are coming up, what scares me is people are asking, should I still buy now? And you have another retail investor answering that, probably 18, 19, 20-year-old who's been watching all, being filled by all these YouTube videos. And that's the scary thing about retail investors is there's been a lot of money made in the early days when this first came to the market, people that were in the know, the smart ones. And now it's just become a money generating topic on YouTube for influencers and creators, and retail investors, I'm afraid, are getting dragged along the way, and now they're all in, and that's what scares me. So what's your thoughts on that?
I think it's systemic of the culture that we live in right now. And look, if you're in your 20s or, in your 30s and stuff, and you're on social media, you're on TikTok and you're on Instagram, and you're following financial content, all you're hearing is this nonsense about how people are making millions year on year on year from their business or from their investments. And it's like, I create financial content, obviously, so I watch all this stuff. And I'm just like, dude, you are talking absolute baloney. Like, if you're making millions and millions and millions, why on earth are you on TikTok? Why on earth are you on YouTube spending the time and the effort and the energy that it takes to edit videos, create videos, when you've got millions in the bank? I'm not being funny, but if I was a millionaire, I probably wouldn't be on YouTube creating investment videos, because I'd be investing in doing all these other things and stuff like that, right? Because I would want to enjoy my money. And there's an element of people saying, well, I want to give back and educate people and stuff like that. But I think you don't have to educate people from the position of, well, I have this, therefore you should listen to me. But it is systemic of the culture that we live in, where it is invest now, get stupid returns, passive income, people really wanting to live a life where they don't have to do any work to generate money, which is an absolute fallacy for me. Like, get real. Like, seriously. If you have a lot of money, if you've got millions in capital, yeah, you can go and live a very, very nice life of passive income. But if you're working in Starbucks or Tesco's or in a garage somewhere or wherever it is that you're working, you need a significant amount of capital to invest to generate a passive income that will cover all of your needs and wants. And I think there is an element of social media that subscribes specifically to those kind of people. And that's why you get the likes of AMC, GME happening, because it feeds to people's, number one, innate instinct for greed and our natural instinct to be lazy as people. And I just say to people that, ultimately at the end of the day, it's the journey that you go on. And especially if you're in your 20s and 30s, you should be focusing on earning as much money as you possibly can. Invest in that for accumulation, because later on you're going to need it for income purposes, in opposed to focusing on the passive income side of things now when you don't have the capital, not really thinking about what's going to happen in 30, 40 years time in terms of your actual financial plan. But talking about financial plans, boring. It doesn't get views on YouTube. I know, because I try to have those conversations. It's not sexy enough, but at the end of the day, this is the real stuff that people need to be hearing, because it's all very well and good going for passive income, but what happens when the market's crashing, that passive income is no longer sustainable? Then what do? You're not working, or you haven't been working as hard as you could do because, well, I've got passive income.
And this is the thing why people make decisions, and these are the results of making decisions on others. This is where, especially when it comes to AMC, I've seen so many decisions, investment decisions on big money, where people can't afford to lose it, based on almost like me saying to you, Pete, Pete, how much have you invested? Do you think I should invest it? And you turn around and say, yeah. And I do none of my own due diligence. And it's strange, because we talk about personal finance. You want to talk about what's spicy, but at the same time, I certainly wouldn't want to be at the result that something I've said has made an impact on someone on a financial loss. And I think that's what's happening all the time.
Yeah, but you know what, Aaron? The only reason why you think that way is because you work in the finance industry, okay?
Yeah.
And I've said this before, and I'm pretty sure that people don't like me saying this. And I know that there are certain people that don't like me saying this kind of stuff, and it feels as though I attack people. But working in the financial services industry as a creator does give you an acute appreciation for the possible ramifications that people can have by listening and doing what you basically talk about in videos. I'm acutely aware of that. And I'm always very, very conscious of, okay, if I say this and somebody else copies this or does this, am I giving them the context necessary in order for them to understand that, by the way, this could go really, really badly? And unfortunately, a lot of people who are creating finance content are not from the financial services industry. They don't understand those ramifications. They just don't necessarily care. A lot of them are IT technicians, doctors, GPs, accountants. Like, you're going on your own journey. That doesn't mean that you can create content telling people how to do something. It's like, I'm not a trained mechanic. Am I really going to make a video on YouTube because it's popular, right, and well paid in terms of the ad revenue about how you're going to change the carburetor or whatever, the cam belt on your car? No, I wouldn't do that. And I think people need to be aware of the sources that they get their information from. One of the biggest investment mistakes that you could make is going YOLO into a stock. Biggest mistake ever. Yeah. Like, and I don't care the rationale. It is the biggest mistake ever. If you're YOLOing into one investment strategy, into one stock, prepare yourself for the worst, because the odds are going to be massively, massively against you. And in the case of, AMC and GME, you were betting against the hedge funds. Those are the people that you're betting against. The guys who see the order flow day to day. They know where your money's positioned. They know how much money you've got on the table. They have strategies of people that are very highly educated, very highly paid, that are financially motivated to get you out of your position. And you, the mechanic, retail investor who knew nothing, heard from your mate down the pub, oh my God, this stock's going absolutely nuts, you should buy. You're going up against, I've said this before, and I think on the previous interview that we had, people would never say, I'm going to beat Usain Bolt in the 100 meter dash. No one would ever think that. But with the stock market, oh yeah, don't worry, I can go in and make a ton of money overnight. It's not going to happen if you don't do your due diligence.
That's a really good point you've just made. And I think people think like that because when you think of the stock market, you don't think of someone sitting there at the other end of it. You just think all these charts and numbers and you're just playing a game, when actually the stock market is manipulated. There is a hidden agenda behind these big movements. I believe there are reasons and agendas behind the scenes why we don't hear good news on the news in the Financial Times about the stock market. They publish a lot of the bad news, what's falling, for retail investors to come and pick that fallen stock back up. So that was a really good point you just made. Really agree with that. And when it comes to, actually looking at AMC, the stock going forward, when you look at it as a company, so normally when you would make a decision on a company, you would look at their financials, their board of directors, how it's performing. Isn't it funny to think that AMC, none of that has been done? That this money being moved is all based on a social media hype. I just can't get my head around it.
Yes, but it's all based on sentiment. But the thing is, right, if you're going to invest in a stock, and I say this all the time on my channel, you do fundamental analysis, okay? So what's the business all about? How much money are they making? For AMC, how many cinema outlets do they actually have? Are there any other subsidiaries or spin-offs to the business that add to the bottom line? You're looking at all of these things, balance sheet, whether they're in profit or not, whether they're paying dividends. All these indicators are things that you should be looking at for the positive tick. Yes, I'm going to invest. The craziest thing is this, mate, right? And I want people to listen to what I'm about to say because this would blow your mind under any other circumstance. What is AMC as a business? It is a chain of cinemas. In the pandemic, when the cinema industry was basically closed and they couldn't open their doors to customers, you saw the share price go from wherever it was in the 20s or so, double overnight when they had no way of generating money. Mm-hmm. When you think of it in that way, the fundamentals of the business, it was all sentiment driven. Why? Because a hedge fund, you're shorting 120% of the stock that's available. That's not right. Wall Street bets get onto it and like, no, we need to mobilize. And look, I completely understand why people mobilize. It's like, actually, you know what? We're not going to allow the hedge funds to get away with this. But in the States, you look at people like Robinhood. Robinhood was selling the order flow book to the guys that you're betting against. Like, as a retail investor, you cannot make this up. I say that and people will think, well, it's a corrupt system. Maybe you could argue that it is a corrupt system. But at the end of the day, Robinhood is a free service. As a business, they need to make money. That's how they make money, by selling the order flow business to the big investment houses, the hedge funds, so that they can place trades in the opposite direction to what the retail investors are doing, because that's how they know that they can make money. So the question then becomes, well, is that business model wrong for Robinhood? Arguably, maybe. But the question is, would you pay $15, $20 a month to use a service? The answer to that is most retail investors will be like, no, because I talk about fees all the time. Just because something is free doesn't mean it's always best, but everybody wants to go for the free option. Well, if you go for the free option, you are the product, you are the service that is going to get marketed and sold by the business for profit later on. It's a really complex, some would say corrupt web, but it is the way things work. And I think as a retail investor, you have to go into investing understanding how things work, because otherwise you're going to get railroaded.
Well, I can agree with that was all bang on. And to be honest with you, people need to listen to that again, because you've just hit the nail on the head about everything you've said. If it's free, there's money being made somewhere. And if it's not through you, they're making money one way or another. And that's where it's so funny, because people will go for the free option all the time. And that just goes to show the difference between someone who is retail to someone who is experienced. So amazing points there, Pete. So to finish just on AMC quickly, let's be bold, let's be brave. What's your prediction? Where does this finish and plateau totally at? And this will just die off. Where are you thinking the numbers sit?
Look, I could be wrong because you can't predict the stock market, but I would be very, very surprised if you see that stock price return to anywhere near where it was. I think where it is at the moment, around about $39.24 as of recording this, is probably where you'll see it stay, if not fall back into the $20 a share mark where it was trading prior. It's not going to get back up to, the $65, $70. It's not going to do that. I just don't believe it will.
No, I sit within that. I would say around about the $20 to $30. I reckon we might see a last minute spike coming up towards Christmas. And then I reckon we're going to see going into the new year just a 20-30 plateau. Amazing. So now let's take a hop over to Bitcoin. Bitcoin is an interesting one at the moment. It's up and down. It's so speculative. I don't really know whether I'm coming or going with Bitcoin at the moment. Like I said, I'm involved in Ethereum and Cardano as well. What's going on with Bitcoin and where is this going over the next 12 months? Like, what are we going to see in 2022?
Dude, like, Bitcoin is exciting right now. It's very, very, very exciting right now. So about a week ago, I did a video on the fact that the SEC in the States were looking at authorizing and actually signing off on some Bitcoin ETFs. Now, I've always said all the way through the conversation about Bitcoin that, if people are speculating that it's going to get to $100,000 a coin, $200,000, $300,000, $400,000 a coin, you're going to need institutional money to be involved to give it that volume to push that price up, especially with the dynamics of the halving and only 21 million coins going to be available. In the long run, you need institutional money. Now, from a regulatory point of view in the States, the SEC has always said we will never, ever agree or sign off on any institutional ETFs in any way, shape, or form. That changed. So this week, we had the first Bitcoin ETF ever to go on trade in the United States, signed off by the SEC. So there were exchange traded products for Bitcoin, but they weren't authorized, and there are quite a few of them available on the market. But this is the first one that has been signed off by the regulator. So what you've seen over the last week or so is Bitcoin take a massive spike. I think yesterday it was trading at something like $65,000, $66,000 a coin. It's down at 63 as we record this right now. But the future for Bitcoin based on this is very, very exciting. There are additional 4 that are due to be authorized. So 4 additional Bitcoin ETFs that are due to be authorized by the end of this year. If that happens, $100,000 a coin is literally around the corner, because the introduction of these regulated or SEC signed off ETFs will give investment houses, pension funds, the ability to invest in Bitcoin in a regulated, signed off environment that they feel will be safe for their pension funds and their client money, essentially. So it'll be a great diversifier. It's very, very exciting right now, mate. Really exciting.
Well, one thing I find quite interesting of all of this as well, and it going on the regulated side, is I want to go a little bit conspiracy here.
Mm-hmm.
Is there not a bigger picture here? Because this is just my mind being open here. Bitcoin was designed and to serve the purpose of keeping things under the radar, being able to, let's just call it, give power back to the people in order
Mm-hmm.
financial transactions, move money about between one another without the big guys getting involved. Now, is there possibly an avenue here where the big guys and the central banks are saying, actually, let's bring this on board, let's regulate it. If institutions come on, then that's going to be, when institutions get involved and they move money, we know where that money's going. So there's more visibility on what's happening when an institution, opposed to us guys on the floor, when an institution goes, we know where more of the money is. In that sense, is that not going to give more visibility and actually bring it more to a formalized currency where the exposure is now open and actually we're coming away from the real reason why Bitcoin is created, so transactions could be done without going down the tax route, without having to declare everything? Are we now, are they accepting and regulating this because they're like, actually, we're gonna double bluff them. We're gonna say, yeah, we'll regulate it, we'll stick it in an ETF because now we know where 18 million Bitcoin is. We've got it.
So here's my view. My view on that is no. Purely because, and this is just looking at the BITO ETF, which went live this week. So that's the ProShares Bitcoin futures ETF. From what the guys at the SEC have said, they are still uncomfortable with ETFs investing directly into Bitcoin via exchanges like Coinbase, Binance, and some of these other exchanges. The reason for that is because of the fact that those exchanges are still unregulated. So the BITO ETF that went live this week is essentially it's not a traditional ETF where you're buying a collection of something in a basket and then you basically derive value from the contents of that basket. It's basically an ETF that is run on futures contracts. So for many people, that is almost counterintuitive. So with the futures contract, what you're basically saying is, right, in March 2022, I'm going to buy Bitcoin. I will take out a contract today. So the Bitcoin price for Bitcoin right now is $62,000. In March, I will buy Bitcoin for $70,000. So when March rolls around, if the price for Bitcoin is now $85,000, guess what? You've got a massive margin in there because you've got $15,000 discount on each coin that you've purchased. But it can go the opposite way as well. If you say I'm going to buy it at 70, but actually it's down at 50, you've got a $20,000 coin loss essentially. So they're not investing directly into Bitcoin and purchasing Bitcoins directly. The SEC feel more comfortable allowing ETFs to exist currently if they operate under the futures contracts of the ability to purchase. So you're not buying Bitcoin directly. So for that reason, I don't think it will impact it. Though I guess the one big fear that you could potentially have that I think that they will get round to, and they're scrambling, by the way, to figure out how they're going to do this, is regulate the exchanges themselves. And they have had a lot of, they've put a couple of things in where exchanges now have to report, account holdings over a certain amount for tax purposes, so on and so forth. I was reading something a couple of weeks ago. They're also trying to see if there's a way to regulate developers who are developing all these digital apps. As well, you have a responsibility to ensure that you meet our criteria because you're building financial apps, digital apps, dApps on the blockchain. So they're looking at all kinds of avenues in which they can actually regulate people. The ETFs, I don't think at this point, from what we've seen, and bear in mind we've only had one signed off, there's another 3 or 4 to come later on this year. Within the ETFs, I don't think that they'll be able to do it. But trust me, I know that they are looking at ways in which they could basically regulate this to bring it onto the purview of their authority.
Well, I think it's a good thing overall anyway, in putting it into an ETF. I think it will bring retail investors more into the market. It gives people more exposure, able to get on the ladder with perhaps having not the full knowledge. But with Bitcoin, how do you see it? Because for someone watching this, they might think, okay, I want to get involved in Bitcoin. I don't really know too much about it. I don't know whether I can take an income from it. Is it a long-term investment? But at the same time, if someone was fairly new to Bitcoin, or perhaps they're investing in it, but they don't really know why. Because I know many people who invest in cost average into Bitcoin. I have to admit, even at times, I think, what am I really going to do with my Bitcoin in 10 years' time? There's no certainty on what its purpose is going to be. So what would your kind of recommendation or your views on, if someone's going to cost average, is it a long-term asset? And what's it going to be used for in 2, 3, 4, up to 10 years? What is Bitcoin doing?
Well, this is a really key point. I think, look, regardless of whether you're talking Bitcoin or whether you're talking a stock, you absolutely have to have a clear goal of why you're buying that asset in the first place. Like, if you don't know why you're buying Bitcoin, you shouldn't be buying Bitcoin. If you're just holding Bitcoin because, oh my God, everyone's saying, oh my, yeah, everyone should be investing in Bitcoin, then you're investing for the wrong reasons. You have to have a reason. So are you buying it because you really do believe that it is a store of value, it is a hedge against inflation, it can increase in price significantly, that it's going to help you, I don't know, pay for child school fees or to help you retire? What is the goal? What is the plan? And if you're going to buy Bitcoin, at what point do you think, actually, you know what, I've done okay, I'm going to take some off the table and take profits here? Like, if you're not able to answer any of those questions, then you've approached this completely wrong. I think long term for Bitcoin, and it's funny that you asked this question because obviously I've been creating a bit more Bitcoin content and stuff like that on the channel. And I've had one guy in my comment section just argue with me saying, you know, it's meant for peer-to-peer lending, it's the user case and all this kind of stuff. And I'm like, that's fine, because it's there in the white paper. You can't argue against what's in the white paper. I'm like, okay, that's fine. But I'm telling you right now, that's not how the investment industry see it. The investment industry see it as a store of value and a hedge against inflation. And that is what's going to drive the price of Bitcoin from where it is right now to the insane numbers that people are talking that it's going to be. $350,000, $400,000, $500,000 a coin. And I think you need to understand the fundamentals of it ultimately, because you're never going to go and buy something, or hopefully you never go and buy something you don't understand how it works. Like, it's got to have its utility. What is the utility for Bitcoin? Yeah. And how does that utility help you achieve your goals, be it retirement, paying school fees, buying your first home, whatever that is? How does it help you actually fulfill your own dreams and get you on that journey? But still, and most importantly, do you actually have a strategy? Are you just going to hold it willy-nilly? I mean, I know people will be up on something 200% and won't even be considering taking profits. It's like, we're talking about Bitcoin being at $63,000 right now as we record this, right? And I'm looking at the chart, 62935. Literally tomorrow, it could be back down to 40. So you need to think about how you're going to take profits and at what junctures you're going to take profits. This isn't an overnight thing. You know, people do get rich over it overnight. If I put 10 grand into this and I could have foretold that it was going to go from, 60,000 to 65,000, I would have made a lot of money. But you can't foretell these things, right? Yeah. So you need to have a strategy. You need to have a plan. And you need to understand the utility of what you're purchasing.
I couldn't agree more. And it's funny because I've actually had the conversation with myself is, okay, do I take profit? Because I'm in no rush. That's the thing. My mindset is I'm in no rush. I'm happy to sit on this long term because I believe it will play a part. It will be some form of a good investment down the line. So at the moment, for me, I don't think I need to put that stop loss. I need to take that profit. But what you've said there, I've had so many conversations where people just they need to have listened to what you've just said, where they're like, they've been up. They've put huge amounts of money in. They've gone all in on Bitcoin. There's been a huge spike and they're like, no, I'm going to leave it. I'm going to see where I am in 5 years. I'm like, no, take the profit, sit in with your original capital and then look to go again and recycle that process and just get to know Bitcoin and its charts and its future and its forecast.
Yeah, but you know what, mate? I mean, look, I talk about taking profits. You don't have to, right? So if you're sitting on it for 10, 15, 20 years and you don't care what happens, sit on it. Don't take profits. Just let it ride out. But if you're investing and it's like, I could really do with paying a chunk off my mortgage, or actually, you know what, my kids got university, I could really do with a bit of money, and you're sitting there and you're looking at your Bitcoin up ridiculous amounts, then it's responsible that you start looking at, okay, maybe I should take a little bit off the table here. Yeah. And you know what? Some people will have strategies where, they'll buy Bitcoin. And because it is, so if we're talking about an asset that is a bit more stable, and I say the word stable, and it's all in my head, I'm like, my mind is blowing as I use that word, because I'm comparing Bitcoin to the stock market. The stock market is not stable, but it's certainly less volatile than cryptocurrency, right? Yeah. So if you look at the more stable of the two being the stock market, and if you look at the stock market and think, okay, we're holding it and we're pound cost averaging in and stuff like that, you have to be pragmatic in your approach. If you have the risk that it could go from 62,000 today to 40K tomorrow, boom, just like that, because you know what? People have invested. There's some whales out there who hold lots of coin. They'll be thinking, I've made a fortune this last week. I'm taking some of the money off the table like we're talking about, and that then pushes the price down. You have to have it as part of your considerations to know, do I take profit? Do I not take profit? Because unfortunately, there are Bitcoin whales out there who hold an awful lot of Bitcoin, and I guarantee you they'll be looking at thinking, I've made a few million. I could take some of this money, I could go and acquire a different asset, I could go and acquire some properties. People actually think this way, and you have to know how those people think.
Absolutely. So to finish on Bitcoin and just to wrap this episode up, Pete, give me your prediction on, I saw you've got a video out on it, on your prediction towards the end of this year, but what does the end of this year price prediction look like, and going into perhaps 2022 as we finish up, mate?
Well, my prediction when I did the video, when I talked about the ETFs and the fact that they were going to be approved, my prediction was 65K by the end of the year. It already hit that yesterday. So, I think I don't necessarily want to do a prediction for the end of the year beyond 65, because again, it's quite volatile. We might see a bit of a drawback and stuff. But I think with the other ETFs due to be approved in November and December, I wouldn't be surprised if we see it move 65, maybe up to 70 or so. But I don't want to give a bold projection towards that specifically. I think next year is going to be very, very exciting for Bitcoin. Look, if you get these ETFs approved and institutional money starts to flood in, the great thing about the SEC actually approving these is that now that the SEC have done that, the UK now has to have a look at it. Europe will have to have a look at it. And once you get that global acceptance or availability of regulated, signed off ETFs, you are going to have the pension funds involved. And I talked about the pension funds in the video. I think the pension funds globally are managing $16 trillion in pension funds. $16 trillion. You think about the responsibilities of a pension fund. Their job is to basically help their customers accumulate money and generate money, income for their clients in retirement. That is their sole purpose. And I can tell you right now, they will be looking at Bitcoin as an asset class, which over the last 12 years, and I did a video on this, you need to go watch this if you haven't seen it. It's called Bitcoin Outperforms, Bitcoin Destroys Warren Buffett. Warren Buffett between 1965 and 2020 delivered 2.8 million% return, okay? Between 65 and 2020. Bitcoin, when it first traded in 2009, traded at 0.08, okay? The return of Bitcoin over the last 12 years was 71 million%.
Yeah, that's crazy.
It's crazy numbers. So the investment houses will be looking at this thinking, we need a piece of this pie, and they want regulatory approved vehicles to do that. That's what the ETFs are. If you see a 1% diversification of 16 trillion into Bitcoin, that $300,000, $400,000 a coin is round the corner, literally round the corner. But it really does depend on who approves what, in what jurisdictions, so on and so forth. In America, there's a lot of money in pension funds. If these 4 come online, trust me, there will be more that will come off the back of it as well. And once you get a good crop of investment ETFs that institutional investors can invest in, the share price the price for a Bitcoin will just go nuts. So next year, I wouldn't be surprised if you see it in the $100,000 mark.
I totally agree. And what I would say for anyone who is watching and wondering the pattern between the US is obviously the financial powerhouse. Normally it's about the UK behind the US is normally about a 3-month delay. So if things are happening in the US, it's a good indication for anyone watching to go, okay, this is what may happen in the UK. Because like you said, the UK tend to follow around about 3 months behind the US. Pete, for anyone watching, where can they find you? How can they connect with you? If you could just give us a bit about that.
Yeah, so I'm Conversation of Money. So Conversation of Money on Instagram, YouTube. You can find me there. I've got the Conversation of Money podcast, which comes out every Monday at 6 a.m. That is a labor of love because it's consistent weekly content that we bring out. Aaron's going to be on the podcast as well. So you can find me on there. On Twitter, I'm Conv of Money. So CONVOFMONEY on Twitter. But YouTube and Instagram are probably your best bets. There's lots of content on the YouTube channel now. There's over 200 videos people can watch for free. And it is all about basically investing safely. I don't like to feed into the hyperbole that already exists around investing. I think we've got way too much of that. I try to approach it with a level head. That's not popular, but I think it's necessary.
Awesome. No, Pete, you've got some awesome conversations on your channel. And for anyone watching, Pete's going to be joining me back in London on the 5th of November, which, again, we're going to dive into something slightly different, and we're going to look more towards 2022 and what's going to be happening. So I'm really excited to welcome you back into the office in London. Pete, I'm sure we're going to catch up very soon. And for everyone watching, thanks so much for joining us. And we will speak to all of you very soon.
Thanks, Aaron.